Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through together, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance, and if you want to join our community, finding-value.com, I dive into all these different topics, subjects, looking for potential investment opportunities and sharing those opportunities with everyone in the community. I like to think that I do a decent job at finding these opportunities and getting people very good entry points. So I definitely think it's worth at least a try for a month. Let me prove my worth to you guys. Special is a coupon code. It's $25 for the first month to try it out. You can always swap to a yearly membership if you'd like to swap from the monthly to the yearly, if you like it, and enjoy further savings. If you're interested in finding companies, strategies, approaches to the market, that's where the value is. I run the website community as I try to teach and how to approach the markets through different strategies and approaches with the three pillars that I've created. So if that seems interesting, if you want to learn that approach, I'm a longer term investor. I have done trading in my past, but I've adopted more of a value long term approach with technical analysis entries. So definitely sign up if you'd like to join. Starting with rock bottom entries, nickel is about to leave the station. Forgotten coiled explosive. Totally agree. Totally agree. Seems like he's pretty on top of his game too. We've already taken positions in a lot of nickel companies. One of them is a nickel iron ore company. The other one is a exploration nickel company that's just starting. It just broke out of its falling wedge. You can see the falling wedge here just starting to break out. It's got the same pattern. And these opportunities, they're going to come and they're going to go, guys. These patterns for a lot of different materials in the market are ripe. They're very ripe. And some of them are at their all-time kind of lows where they're not breaking to all-time lows. They're scraping along the bottom sideways, which means a lot of the selling pressure is done. That's where the value is. And I'll show you an example. I won't give you the name of something that I may, take a position in, just to show you kind of how it works a little bit. And then obviously people in the know, we're accumulating it. So Jeff says, the surprise that no one is talking about is how easily you can get to $100 crude oil. Managed money short interest has absolutely surged over the last year, just as it did prior to the 2017-18 and 2020-2022 ragers to the upside. I'm not saying oil will rally. The metric has a crappy hit rate, but when it does hit, watch out. The street isn't expecting such a thing. So this is crowded short interest, sometimes create huge rallies. Here's the correlation to 2017, a big rally from $50 to 85. Another one, 14 to 127. We had a couple other ones that were chopping sideways there. We have another hit today of short interest. Now, what would I do? What should I do with this information? Why does it matter? I don't think the short interest, it's generally best to always take the opposite bet. But what gets me into oil isn't the short interest. It's not the short-term market movements. It's the value that we see against other asset classes. Crude oil is amongst one of the cheapest. So I can tell you this, guys. The way you make big money is you get in and you have to be aggressive when others are really fearful. April and May of 2025 was a great entry point for some of the energy service companies and some of the oil companies. Now, there are a few opportunities that exist today that you can get in that are ridiculously priced. And they're not the bigger oil companies, they're more the smaller stuff. And they are such incredible opportunities down here. The big money's made when everyone else isn't looking. And you buy patterns. You get in low. That's how you get it. And then you have to use patience. A lot of people lack patience. They let frustration get the best of them if they can't wait a few months or maybe 6 months to a year for something to really move and come out of the bottom. But buying those bottoms, that will, here, I'll put it this way, guys. I think that we are putting in major bottoming patterns on a double bottom that we will never see these prices again. That's my take. I think we're going to go into a 10, 20, 30, 40-year bull market in oil. I think oil is going to get short out in the future starting after 2025, 2026. We'll probably put a bottom here, quarter 4, 25, quarter 1, 26. Again, I'm not going to say in the short term exactly when it will bottom, but I think we're putting it in. Now, if there's a washout sale, you get one last, insane opportunity to accumulate, but I don't know if that's coming or not. I can't tell you if it is or isn't. But here's the opportunity. It's right in front of us. Oil's cheaper than it's ever been. And I think this is going to be a bottom for the next decade plus. And what I think is coming out in the future is going to be a lot more difficult to get oil, a lot more expensive. And those with infrastructure in place that can produce oil or ultimately convert natural gas into oil, that's kind of what they're doing. Not literally, they're burning natural gas to obtain heavy oil out of the ground. I think they're going to make a lot of money. They're going to make a lot of money for a good period of time. So it's a great opportunity. Don't let it get by. Copper is no joke on one of the longest term bullish pre-breakout setups. Generational wealth type setup for those who understand the implications for quality copper juniors. Ignore the short-term correction blips in metals and go long and stay long. I have a little bit different approach. There's two outcomes here, I think. I'll name the potential outcomes. Well, maybe there's more than two outcomes, but I'll name a couple outcomes. Oil gets real tight. And I know people aren't thinking about this, but oil gets tight over the next 10 years. The copper price goes vertical. But the companies that come online that don't have infrastructure in place and they have ore grades below 0.3%, they're still not going to make a lot of money. So if that case runs out, where we've got these declining ore grades and these new mines come online, I don't think the money's going to be made there as much as what maybe people think. I think there are other companies that have infrastructure in place that have high ore grades that are more anomaly. I think they're going to make ridiculous sums of money. Ridiculous. That's where I want to be. The juniors may be okay, but I don't see a ton of really great projects in the juniors. There are a company or two that I think looks ridiculously good. And if you're part of the website, guys, you know what company I'm talking about. You know my favorite. So, yes, copper looks fantastic. Here it is. I'll do my quick spiel on copper. We've got this big kind of breakout here that's going, and I think we're going to go probably all the way up to $8.50, $9, something like that. And we're going to create a new stage. So here's a stage there. We're going to create the second stage is here. And then we're going to create another, I think, level or channel or stage as well, I'll call it up here. And then what we'll see is we'll see another big move and something like that. There you go. That's it right there. That's what I think will happen. And we'll just keep stair-stepping higher with these consolidation 1, 2, and then a third one. And we'll just stair-step our way up over long periods of time. And this could be higher than this. I'm not stating that this has to be at $8, $9, but it could be higher. We'll see. But something like that is pretty likely, I think. So that's what I think. And I think oil is going to do the same thing. So here's oil on the long term. And then what we're going to do is we get these stair-stepping patterns. My Lord. So we're going to stair-step 1, stair-step 2, stair-step 3, stair-step 4. And then what we can do is you can just grab perhaps, let's do it from the top here. So we'll do something like this, and then we'll throw, not that. All right, there we go. And then this will go up here, and it will break out, and then we'll go and peak at 330, and we'll run here, and the lows will be at like 150. So that's what I think will occur. Something very, very similar to this right there. That's what I think is coming. And this will be, $250, $300 oil, and then we'll consolidate on top of it. And this is where all the money is going to be. There's going to be a ton of money made in here, a ton of money for some of the companies that we're in. And this will be your gigantic dividend payout if you hold through all this volatility. If you purchase down here and here, those will be the ideal entry points here and here, here and here. That's it. So that's what I think is coming. And copper is going to do the same thing. Freight futures AM update, dry bulk, Capesize is up 3%, Panamax up 2%. Tankers, VLCC is up 5% today. Suezmax up 3%. The tankers, they're ripping. You know who's got exposure to tankers? This guy does. They're paying me dividends and a ton of upside. They look ridiculous. They look ridiculous. Well, you know what I'll say? There's a lot of sectors that look ridiculous. They look absolutely fantastic and ridiculous for big, gigantic moves. OPEC Plus oil production is basically unchanged from 2010, while global oil demand has grown by over 18 million barrels a day. Guys, we have a problem ahead of us. We have a problem. I know we're talking about all this oil on water, all this BS to try to hold the price of oil down. Good luck with it. Good luck. It's coming. It's coming back. It says that's a juicy EIA oil storage report. Big drop in implied U.S. crude oil production. Not only did U.S. oil inventories not build, it dropped 15.4 million barrels. Crude dropped 7 million barrels versus our estimate of flat. This isn't good, guys. It's not good for people who use oil. It's fantastic for those that have oil allocations in the portfolio. Oil looks so good. It is such an opportunity. My God. Guys, I look at some of these charts and I just can't believe that they even exist. I can't believe. I am so fortunate to have the tools and the skills that I have today, that these opportunities exist and I can recognize the opportunities. And I hope that I can help others change their life for the better. And I hope they can hold on to it. That's what I hope. Rock bottom entries. Copper is breaking out from a 14-year cup and handle pattern. Yep, it's going to make a next move up from its resistance level. Guys, there's opportunities all over this market. Now, some people will say, "Oh, I'll just put it in, COPX or something," right? It's a ETF. I would, if it were me, I would look at some of the individual companies and I would take some positions. I think that the outperformance in some of the individual companies is well worth the effort. Well worth the effort. I mean, well worth the effort. I'll just put it that way. Against all odds, this sector This sector's been on fire all year. Now it's pulling back to reload, retest, and then boom. Completely agree. It's XME, metals and mining. We've broken out of this last resistance area. We've done a retest, and now it's going to go into a fly zone. It's go time, guys. It's go time. This is where big money's made. You take early entry points here and here, and then you ride. You ride. You could get this one here too. And then you sit and you do nothing. A lot of people are going to get scared out because they don't know what they own. You got to know what you own. You got to get conviction. You got to get a strategy together. You got to get that portfolio allocation right. You got to be able to ride through this volatility. Know what you own. Buy the value. Get it when it's cheap. Get it when it's cheap. So things are looking good. Ladies and gentlemen, I present past and present valuation metrics across all major financial crashes. Hope this helps. 29, 87, 2000, 2007, and 2025 dwarfs all of them. That doesn't look like a good picture, guys. Very overvalued. You know how you make a lot of money? You don't buy crap that's overvalued. You avoid this. That's where you keep the money. You don't lose it. You don't chase valuations. Chase the stuff that's down. Chase the stuff that's down. Be patient. Don't get too overloaded. Some people will say, that diversification is for people who don't know what they're doing. Well, in commodity stocks, I'll just say this. There's a lot of things that can happen that are outside of the control of the company. Assets can be taken, nationalized, taxed to death. Things can happen. Rules can change. Jurisdictional risk is real. So you don't want to get you don't want a 50% position in one mining company that only has a single mine. It could work out incredibly great, but there are factors outside of the company that can harm it. So there is greater risk in mining than there is in having facilities across the world producing something where you can just change your input versus providing the output for that input. Coming down Grady, it says uranium miners had a big move last 6 months, which is now making this ratio chart breaking out hugely. This is the big ratio chart breaking out for uranium. A very symmetrical blue 9-year inverse head and shoulder pattern versus the S&P 500. Uranium miners ETF Uranium did a 580% move in its baby bull move. Still, it's just getting started. Next phase is now starting with this breakout below. The glorious commodities bull market will be the greatest opportunity in your lifetime to get out of the rat race. I said now for 5.5 years now, do not miss it. So here it is. Shoulder, head, shoulder. It's breaking out. What do we do? Andy, what do we do? You sit. You sit. You wait. If you have uranium exposure, you know what you do? You do nothing. You let it make you money. Well, what if I don't have a position in uranium? There's still plenty of opportunities in a whole bunch of different sectors. Now, some of these companies are getting a lot more expensive. The price to book values are not as attractive as they were at lower prices. But it's still going to go higher, I think, because we're coming in a cycle. Eliantic Capital says, not that anyone cares, but that's a 20-year breakout in the LATAM underway. Latin America 20-year breakout. Yeah, I've noticed. And I'm partaking in some of these highly leveraged areas. This is it. They're breaking out. Do you have exposure to this? You don't have to have exposure, but if you want to diversify, have Latin America stuff, then yeah, there's some great opportunities out there that are just starting to break out. They're just starting. URA versus NDX, the Nasdaq, it says tech is all the rage. Meanwhile, uranium miners silently outperforming and breaking a bottom range. Here we are breaking out. It's double bottom. And here we are breaking out. That looks fantastic for URA, the ETF, uranium ETF. Guys, this happens at bottoms. So the reason I'm showing all these big picture view charts is that this is the cycle. It's all turning right in front of your eyes. Did we buy the bottom in 2020? We did. I did, at least. In 21 and 22, all of those years that we were accumulating these individual companies at bottoms in these falling wedges and corners, this is all going to unwind. And I'm trying to provide a vision through charting and my commentary here. The vision is we're coming out of the bottom, and now we're going to go into a bull market. That's what's next. Stage 1 base, stage 2 bull. That's what's coming. These are big picture views. The big money's made in sizing the big picture moves. And when I mean big money, what is big money? I'm talking about money that you can't even think about sometimes. 40x, 20x in some of these companies, if you got good positions, a good entry point in the position. You can't chase and get a good entry point. You're not going to make a 40x if you're buying breakouts up here versus buying them down at corners. You got to get in these corners here if you want to get a 10x, 20x, 30x or more. There's a couple companies that we've been buying on the website. I think it's possible that we could pull out, 40 to 100x moves. It's possible. Now, I don't know for sure, and that's why we look at the opportunities, we spread across them, but I think there are opportunities that could do that. The silver-copper ratio remains undefeated, down 15% already from the highs. Price is one thing, but measured against other non-fiat, I think it makes sense to listen. So he's talking about silver high, silver high, silver high. And he's got this here. I don't know if it's a silver high on the ratio or not versus copper. Copper and silver both look very good. So I'm not going to try to choose. I'm riding both. But copper does look very good. Here's another ridiculously insane pattern here. Copper versus gold. Now, I'm not anti-gold. I'm not anti-anything. But this copper to gold ratio, look at that thing, dude. This is prime here, guys. Oh my God, I'm biting. Oh my God, this is a falling wedge into the corner, and it's cheap. I think this looks ridiculously good. And we can do crude oil to copper too, because I said crude oil is really cheap. Look at crude oil to copper. Oh, sorry, I put gold in there. My bad. I just naturally put gold in there. Let me try copper here. Yeah, look at that. Guys, crude oil to copper. Oh my God, that's such a good entry for crude oil. Crude oil looks so good. Sorry, I got to get off this. So good. And we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special with the coupon code. And that's all I've got for today. So we'll catch you next time, guys. See ya.